Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. We are in the final 2 minutes of the trading day, and as I zoom in here, you can see that we are closing with a big, long red candle. And notice down below, that volume is increasing on the way down. Now, if you've been following along with my weekly market reports, or if you're a member and have a copy of the 7-point trading checklist, you'll know that that volume is extremely important when gauging the momentum of the move. So in other words, if we have the sellers moving in on higher volume, that's telling us that the motivation level on the sell side is still high. So my downside target right there is still in place at 411.32. I think we could even form an ABCD pattern before we get down to that target. Remember, A is at the very top pivot point. If we get a pivot up sometime next week, you would then label that a B, and then a pivot down from that next high here would allow us to put a C, which ultimately and usually leads to a lower D. So that's the possibility of an ABCD pattern forming on the way down. So again, my downside target is still in place. Looking at IWM, that's the Russell 2000 ETF, you can see here that we have another red candle closing below that 20-period moving average. Now remember, that moving average, now that it's broken, is going to act as a resistance level. Look down below, you got that increase in volume down there with the oscillators, the stochastic and the CCI still heading lower. Now, I do believe we'll see a green candle early next week. I don't think it'll be a prolonged rally, but I think it could allow us to see a little bit of a break in the selling, and then later on in the week, come right back down to that target at 212.78. So coming into the final seconds here, let's move on to QQQ. And there is the closing bell right there for the markets on this Friday, October 25th. Interesting thing about the Qs is that we had a handful of tech stock, Google, we had Nvidia moving the Qs up for most of the day. But look at that candle. That is a shooting star. I talk about that quite a bit. That is a bearish candle. And not only is it a bearish candle, but we had the high today with a higher high. But look at the highs on the oscillators. The highs are showing lower highs. That is a negative divergence, very bearish. So again, downside target still in place for the Qs right down there at 264.86. Now I just want to show you something here with SPY, very interesting. We had an update for most of the day. We have this little bit of a bounce here. This is the B pattern that I'm talking about. You see, today we had a higher low and a higher high. And so that allows me to put a B there after we've already pivoted from the high here, which is A. If we pivot lower here next week on SPY, then you're going to most likely see a price at D that is lower than B. That's just how the ABCD patterns work. If you look at the description box below, you'll see there's a video link to some of the weekly reports that I did that highlights the ABCD patterns. Very important that you understand how that works if you're a trader. Last night on our equity analysis member call, we spent a good hour talking about ABCD patterns and how they work for individual stocks. Again, they work for individual stocks on equities. You could apply them to commodities, futures, and such. Even the bond market, you could look at that. Or any equity, in fact, that you could think of. You start looking for ABCD patterns and you'll find trading opportunities in there as well. So again, I think we're going to zigzag our way down to this low right here, which has me at that price target at 555.58. If you look at the weekly chart there, you're seeing again on the weekly chart, as I zoom in here, you have the official pivot on the weekly. And that's the first red candle this week that we've had after a series of 6 green candles. That's called a stale green light. So we're most likely going to continue lower on the S&P. Look down below. We have an official cross below the sell signal here on the CCI. See, when it's below 100, you see the little blue bubble there? It's at 99.81. That is below 100. So we have officially displayed here on that CCI a sell signal. We're a hair away from crossing with a sell signal on the stochastic. And so when you look at the weekly charts, those carry more weight than the daily charts. And I like doing that because you'll find that over time, when you look at more charts, you're going to apply this, what I call 3D charting technique, where you're looking at all of the time frames. Now, finally, before we get into some of the precious metals that I do want to talk about today, look at the VIX. We had the pivot here on Wednesday, and now we have a series of green candles. We're almost at that momentum line on the CCI down there. That's also known as the zero line. Once we cross over that, like we did back here, you'll most likely see the VIX start to take off. Now, for those of you who are trading the VIX through VXX or maybe some of the other volatility instruments and other major markets, you have to keep an eye on the momentum because the VIX will begin to take off. It doesn't take much for the VIX to move. And so I still have an upside target on the VIX at 2668. So far, all of the forecasts that we've had look like they're on the way to being hit, as the market momentum is definitely shifting to the downside. Now, I do want to talk a little bit about gold. I'm using GLD. You can see here that we're at a top. This is a bullish engulfing candle today, but remember, the bullish engulfing candles are accurate 80% of the time. Usually, they fail 20% of the time when the bullish engulfing candles are found at the end of an upward leg. So I do have a short-term downside target on GLD, and I am looking to buy more silver down here. I have my price target already established. I'm going to be a buyer of silver right around the 29.5 level. My exact target right there, if you see in the data box, is 29.49. So stay tuned. If I get back into silver, I will announce that on my X page, where I'll put in hashtag AJSLV trades, and you'll be able to follow along with my technical analysis there. So that is the market review. Now, last week I mentioned to all of the new viewers here on YouTube that I use the 7-point trading checklist. It's a handy little tool that I put together for our members. It most definitely helps increase your probability of hitting those targets. And we are still tracking an 82% hit rate, which currently is the best in the world. I would love it if someone challenged me on that in a friendly competition, showing their record versus our record. We could join forces, so to speak, and really create a powerhouse of technicians that'll put out some pretty decent price targets. But right now, we're tracking 82%, and our members are extremely happy. Now, one of the things I want to point out here, and there was mention of this in the comment field last week, is if the earnings are so great on the markets, how could we be going down? Well, the truth is, if you look at the Russell 2000, now keep in mind, this is the small cap index, you have almost half of the companies listed in that index are showing negative earnings. Let that soak in. They're not making money. Negative earnings means they're losing money, and almost half of the Russell 2000 is in that position, and the numbers are going up. Look at this chart. You could see that we have an uptick in the number of companies that are losing money. That obviously is not going to be good for the economy. The other thing that's not going to be good for the economy, nor will it be good for the banks, is that Americans' excess savings are basically gone. They're completely gone. And you can see here from this chart, this is in free fall. Now, why does that affect the banks? Well, if there's less money in the banks through savings accounts or CDs, whatever it may be, the banks have less to loan out. So the profits for those banks drop. The money that is normally loaned out in more or less a rehypothecation type of a system The money that is deposited does not get loaned out, and the banks don't make money. That puts a big crimp in our economy, especially with small businesses, because they need those lines of credit to operate for payroll, expansion, product and services for supply and such. The other thing that I found very interesting is that while the savings is dropping to almost zero, credit card debt is still exploding. We're at levels that is way beyond what we saw in 2008 and way beyond what we saw right before the COVID crash in 2020. So I've been talking about this quite a bit. It's something you definitely want to keep an eye on, because you see here with the banks, like I said, there's now $515 billion in unrealized losses for these banks. And it does not look like this is getting any better. Some investors seem to think that unrealized losses is not a big deal because the losses are not yet realized. Well, eventually they'll have to be realized. And so they are a loss, whether you call them unrealized or realized losses, and the banks are in a pinch. Most definitely, that's not looking good for the banks. The other thing that I want you to pay attention to here, if you're tracking the numbers with regard to banks, is that the number of assets of banks on the problem bank list, this is according to the FDIC, is on the rise. Now, look down here as I draw this arrow. This was right before the crash of 2008 and the Great Recession that followed after that crash. And you can see that we have already surpassed what we had at the initial stages of that crash. You see, so all of the signals that I'm looking at are very clear. And as you connect the dots, if you keep your eyes open, you're going to see where we are headed. Last week, I talked about what was happening with the BRICS nations. They had their conference this week in Russia from the 22nd and just ended yesterday. And so the news is now coming out of that conference. And I talked about this as an attack on the US dollar. And again, our economists seem to be shrugging this one off, but this is a very big deal. 159 out of the 195 countries, this is more than 3/4 of the world, is adapting to BRICS Pay. BRICS Pay is a blockchain-based payment platform that basically runs parallel and direct competition with our SWIFT program. This is where we, as a nation, basically through our sanctions, forced the BRICS nations to do this. They had to do this. We basically tied up their money in US dollars. They couldn't trade. They said, oh yeah, well, we don't need you, America, and we're going to find an alternative way. So they created an entire parallel universe, and it's actually allowing them to grow even faster than ever before. Pay attention to this, folks. I just want to mention something that in 2008, the majority of the economists and bankers and Wall Street experts were not even seeing the signs that was building up into the crash of 2008 and into the Great Recession. There were a handful of analysts like myself that were shouting from the rooftops. We called the top. I called it early. I usually do that because I want to give people enough time to react, maybe let the news and the information and all this data soak in, because there's still some people out there that think we're just going to keep going higher. Folks, I'm telling you, mark my words and mark it on your calendar that you heard it here on this recording. We are going to crash like never before. We're going to see something that will shock you. I believe it wholeheartedly. I'm seeing it. I'm talking to people in the military. They're giving me signals that something is going on. There's rumblings. I believe that the U.S. is more vulnerable to an attack, economic attack, financial attack, even military attack. We're more vulnerable now than ever before. Our borders are wide open. We are getting into the mix with Israel. This could potentially lead to World War III. And with our open borders and an unsecure nation, you have to be crazy to think our enemies are not going to just walk right in and attack us. My guess is that they're somehow going to attack our internet, our power grids, and if that happens, the whole banking system shuts down, and now you have the black swan that moves in. It's impossible to forecast exactly what that black swan is going to look like, but that is my theory. You have to understand, folks, my office was in the World Trade Center. I had an office on the 14th floor of Tower 1. I lost 26 friends. This is very personal with me, and I believe that we are stepping right into it all over again, but much bigger. There's nothing more that I can do to warn people and give them the signs that I'm seeing. Very few people on Wall Street are going to talk to you like this. My forecasts are accurate. My long-term forecasts are extremely accurate. I've called every single top since the top in 2000, and I've been extremely accurate. Like I said, I'd rather be early than late. And I'm giving you this with enough time to be able to protect yourself in the markets, whether it be through options, stop loss orders, moving the cash when you feel it needs to be moved, or at least notifying your money managers, if you're having your money managed, that you're concerned about the downside risk. At least let them know so they can be on guard to protect you. If you don't tell them, then they will not protect you. They're just going to tell you, just hang on. It's going to be okay, right? That's what they told everyone in 2000. And we dropped 50%. And it took 14, almost 15 years for the markets to get back up to the high. If you want to hold on and wait 15 or possibly 20 years to get back up to the break-even point, which we see right now is the high, that's totally up to you. But I'm certainly not going to let that happen. I'm going to make money on the way down. I'm going to help our members make money on the way down. We have a lot of very happy people, and I hope you are too. Special thanks to those who have donated to the hurricane relief. You have to understand that I did not ask for this. These were volunteers that came in. Thank you, Eric. Thank you, John. Thank you, Leah, Harvey, BG. Thank you, Vic. Vic donated a couple times like Eric did, and Steve G. I told them that I will be matching the contributions ×4, and at the end of next week, we're going to wrap things up, and I'm going to deliver a check to the church in town that has been helping with the rebuild, and I'm just going to hand that on over, and I am going to let them know that that came from all of you. Thank you so much for your generosity, and thank you so much for liking, sharing, commenting, and subscribing. Have a great weekend, folks. So long.